Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Well, stocks are looking at a negative open after what was a muted action yesterday, and of course, 2 straight days of gains for the S&P before that. Well, joining me now with more on where we're headed from here and how investors should respond to all of this is Thomas Hayes. He's a chair and managing member at Great Hill Capital. Thomas, always great to have you.
Great to be here, Kristen.
All right, so what do you make of all this market action of late?
You want the good news or the bad news?
Let's start with the good news.
Okay, well, the good news is the same as the bad news, and that's everyone is pessimistic, okay? So you saw the fund manager survey from Bank of America this week. Highest expectations of a recession, fourth highest in 20 years. So we're talking about 2022, we're talking about 2020, we're talking about 2009. Most number of managers wanting to go underweight U.S. equities. So usually that's a washout. And what we're seeing is the quote unquote dumb money is now the new smart money. Retail investors have been buying a ton of stock on this weakness. Hedge funds have been record selling in the hole. And oddly enough, retail investors have been right since COVID.
So let's talk about what these tariffs mean for companies and how companies might respond to them. Of course, we're at the beginning of earnings season. Thomas, what's your expectation, especially when it comes to guidance?
That's the big deal. I mean, the big problem is companies can't guide in this period of uncertainty. And Kevin Hassett was on one of the networks yesterday, or 2 days ago now, saying we have bundles of deals with amazing terms. Well, my message to the administration is, how about taking yes for an answer? You saw Vietnam come to the table and they said, we'll do zero tariffs if you do zero tariffs. I understand there's non-tariff barriers, but what the answer should have been was, we accept in principle contingent upon working out the non-tariff barriers. Instead, they did not. And what happened? China went to visit Vietnam and they just inked a deal. So you snooze, you lose. I think the administration has a lot of good things going. They should book one deal, and that's going to give companies more certainty to say, hey, here are our 3 guidance scenarios. If they continue to do deals, good things are going to happen. If they don't, medium things are going to happen. And if they really don't, here are the bad things that could happen. And then the market can kind of get their hands around it. But right now, we're just shooting in the wind. So
we are probably down still about, let's say, 14% roughly on the S&P 500 from a recent high. Do you think it is range bound until we get a little bit more certainty?
Yeah, we have 2 frameworks. One would be Trump Tariff War 1.0. In 2018, you had a 20% correction.
Yes.
And then you were at new highs 4 months later. That's a possibility. We would love that. The second scenario that we're looking at is the 2011 European debt crisis, 20% correction, and then 3 months of hell, choppy volatility. Even though the bottom was kind of in marginal new lows, it was literally up and down every day for 3 months of uncertainty until Mario Draghi came out and said, we'll do whatever it takes. So we need one of those moments. So either way, but even in that case, 8 months later, we were at new highs. So I learned early in the business, Kristen, good things happen to people who buy high quality businesses when they're marked down, and I think this time will be no different.
What are some of the high quality names, Thomas, that are on your radar?
Yeah, I think number one, don't give up on PayPal. Everyone is down on PayPal. It's kind of round trip. It shot up to 90. Everyone's like, woo, we're up 50%. Now it's back down in the 60s. They're generating record free cash flow. $7.5 billion. They'll probably do $7.5, $8 billion. They're going to buy back 20% of the company in the next 2 years. Alex Chriss came from Intuit. He ran 50% of the revenues. He had a 30-bagger while he was running the small business division there. He's going to do the same things for PayPal. PayPal's down because EU said, oh, you're going to tariff us, we're going to tariff your processors. And people shoot first, ask questions later. The fact of the matter is the deal is going to be very simple with the EU. You take our LNG, we'll lower your tariffs. They won't tariff our processors. All will be well. Alex Chriss is going to run this up the flagpole. You see Will Ferrell on the TV commercials. They're rocking and rolling. They've got 430 million active users. This is a huge business. Every time you take an Uber, that's actually PayPal. You don't even know it. It's called Braintree.
Interesting.
Yeah.
Another energy company I know has been on your radar for a while as well. What's the latest on that? Yeah,
so Comstock Resources, it's a double since we started talking about it. That's over a year ago. We think it can double again, and here's why. $8 billion enterprise value, the proved reserves, PV10 that they have to report to the SEC, 10 years of drilling is worth about $7-8 billion, so that's good. The unproved reserves, which they don't have to report, is about 15 years of drilling. We estimate that's worth about $10 billion. So we think it can double one more time from here. And it's perfectly in line with the Trump administration initiatives of drill, baby, drill, massive energy, powering the data centers, and now, of course, servicing Europe.
Yeah. I do want to ask, Thomas, the lessons from 2018. I think there are real questions out there. You know, obviously the president can call shots at warp speed, but for an entire supply chain to adjust to that, and consumers, you know, they obviously can't act as quickly as the president, we presume.
Yeah.
So what are those lessons learned from 2018 that might apply to this scenario today?
Yeah, the lessons of Trump 1.0 and 2018 are excess volatility followed by resolution to the upside. That's the way he rolls. So he throws out these grenades and everyone ducks for cover, and then when he realizes there's enough pain, he goes in and he fixes the problem. And I think what you're going to see is, as you see 1, 2, 3 tape bombs, look, you're going to wake up one morning, everyone's pessimistic, and you're going to see a beautiful truth or tweet, whatever he wants to call it. It's going to say, I just got off the phone with my good friend Xi Jinping, and the market's up 5,000 points, and you're stuck, you know, in cash, and you say, I missed it. So I think it's selective buying, it's not wholesale buying. It could take longer than we expect, deal with the volatility. As it relates to supply chains, we just need to see one deal hit the tape, and then they can get a little more comfort. There's some rationality. We can slowly move ahead. But yes, people are slightly on pause, and that will have an impact in economic numbers in the first couple of quarters for sure.
All right, Thomas Hayes, he's a chair and managing member at Great Hill Capital, joining us in studio. Thomas, thank you.
Thank you, Kristen.
It's great to have you.
Likewise.